Hi, welcome to the Market Alert for Friday, the 13th of December. So, Friday the 13th, it's a bit ominous, isn't it, if you're superstitious? And talking of which, there are a few headlines that are slightly ominous as well, which we'll look at in just a moment. But let's kick off with this one. Sell all things. Hot inflation sends dollar higher. Everything else down. We are not amused. Well, certainly not for the silver market for yesterday. US stocks saw weakness with continued underperformance in the small caps. That includes the Russell 2000. Dollar bid continues with the Swiss and the euro worse as stocks and bonds sell off. The Swiss actually dropped their interest rates yesterday by 0.5% as well. And this is an interesting story as well. Janet Yellen sorry after presiding over 15 trillion increase in US debt. I've never liked this woman. I'll put it out there. And purely been simply because she's an academic. She's never done a hard day's work in her life. And it's all been, theoretical as far as she's concerned, and one big experiment. And now she's worried about it. Well, and her predecessor as well, Bernanke, just as bad, except he was in the banking world. The ominous one I was talking about earlier is we are not ready for what is coming our way. NATO chief calls for shift to wartime mindset. That's slightly alarming, to say the least. Looks like we're going to be dragged into something post-New Year, I would have thought, as it starts to escalate again, but it's out of the headlines, as it were. If you look at the alternative media, you can see what's going on. So, yeah, I thought that was an interesting one that they threw that out onto the Sky News website yesterday. I thought, oh, here we go. We're starting to see these sort of things. We had this with COVID, they started dropping these, or we've got this so-called bat flu thing, or dead bat in a bowl of soup, and then it just escalated from there. So just watch out for these sort of headlines. It won't affect the markets. They couldn't give two hoots, as we've seen over the last few months, whether there's war or not. The last time the markets dropped was the Russia-Ukraine invasion, which I think is 3 years this next February, and then the markets discounted it. But you never know with this one. It could be a bigger one for sure if the whole of NATO is going to be involved. We'll have to wait and see. Economic news for today. Well, just got UK GDP. The market's going to have to make its own mind up. It's Friday the 13th, and I suspect that they'll probably try and move the markets back to the upside, particularly for the Dow, which we'll look at now. So in the Dow, we continue to move lower there. You can see this. We're down to 50% retracement now, heading towards that 62 that we spoke about yesterday. The golden ratio may get down to there today and then find support. But we've certainly seen the Dow pulling back. None of the other stock markets, but the Dow. We've got 1, 2, 3, 4, 5, 6 days, isn't it? Yeah, 6 days, trading days, that is, of the market moving lower there in the red. But we are oversold, and the others have got strength. 30-minute chart for yesterday. Again, we try and move the market up in the derivatives arena, and then bring the market down, as you can see there, down to the close of yesterday overnight, just testing this level. And in the German DAX, this is the daily chart. I've opened all of this up so I can show you what's going on here. I've drawn in a 78 to 89% retracement there. We can see where the market stopped. This is a crucial area, as I mentioned yesterday. When you get to an 89% retracement, will the market take it out and then take out the recent high, in this case the all-time high of 20,474. Market at the moment is holding because we're above the 5-bar moving average, 20, 50, and of course the 200, which is also down there. If we just bring this back up a bit, now showing you the inside of what's going on there, or close up. So yeah, the market's got to stay above 20,474. If not, we'll continue higher. If not, we'll start to make our way down, and I'll show you how to measure down to this in the next alert if it does move down. In the 30-minute chart, very messy for yesterday, and it was messy as well, down to whatever time frame you were trading. It was stuck in a bit of a range, as you can see there. It's just have a quick look, see what the actual range was. That's the low up to the high, and it was just 100 points, just below 100 points there, range for the German DAX for yesterday. And in the S&P 500, trading sideways quite nicely. We've already done an 89% retracement in this market from there back to there. You get used to seeing it and eyeballing it. You can see that it's there. 6,099 is the all-time high. Got a bit of demand for yesterday, so I've got the D there and the increase in volume. But you can see that there's not been much participation over the last week or so with the S&P 500. Maybe that's Thanksgiving, but certainly after that, I mean, it's really very, very quiet, isn't it? 30-minute chart, a bit like the Dow, very choppy and then down, but overnight not anywhere near the low like the Dow was there. In the UK, the FT 100 is sideways, finding support at the 200 MA and the 50 EMA. Struggling a bit to hold above the 20 there, so it needs to get back above there. But again, it's starting to show a defined sideways trading range there. UK 30 market very choppy yesterday, and I'm expecting the same again today. There's a gap there that hasn't been filled overnight, so maybe we might get a bit of a rally up to the DP to fill the gap before further weakness comes into the market. And in the headlines, we saw dollar dominance yesterday, moving up strongly there. I've drawn in some fibs on this chart as well. We're looking at the 89 level, which is that red line there. See if the market can get back to there. If so, that's going to continue to pressure the metals, and in particularly the silver price. So let's have a look at that. So yesterday, silver was absolutely monkey hammered. As you can see, they're finding support though down at the low of this bar, which came in on the 9th of December. So price is trying to stay above that 20-bar moving average. As there's no economic news today and it's a Friday, you could expect this market to come back down and retest the 200 MA as well. This is what happened yesterday, just accelerated after that new economic news at 1:30. Gave all of the manipulators the opportunity to send the market down, and you can see it's down to the close and low of yesterday at the moment. Price is trying to find support there. There is a bit there. You can see the volume coming in as prices hit this sort of level, and you've got an 89% retracement there, but then it was retested for a double bottom over there. So trading in a bit of a sideways channel there at the moment for the silver price. Looks a bit better for the gold market, certainly a lot firmer. And the 30-minute chart, we had a bit of a shakeout with the LBMA market, then finding support at the 200 MA and moving off this in the 30-minute chart. Just the one economic news item that we've seen, 7 a.m. release for the UK GDP numbers there. Right, so have a look at the gold-silver ratio. And no surprise here, really, as I've kept barking on about the 90... Get rid of that. The 90 level is key here, and you can see we're starting to trade back as well. If you're looking at February retracements as well, we're around 62% retracement there at the moment as prices attempt to move higher also here. So I'll just mark one up for you just to show you, and it's a bit weird. This is in how it works in Trading View. I can't show you 89 because it won't let me adjust it, will it? Or won't it? Yeah, let me just draw in this one, 0.89, and then do that. So there we go. You can see that it's 87.81. So that's where you'd expect to find some sort of resistance there if prices come back. But I wouldn't be at all surprised if we still don't attack that 90 level. That's obviously above all of this at the moment. Right, quick look at yesterday's trades. So we had a bit of a spike to the upside as the futures opened at 7 a.m. and then the markets became quiet. Prices then spiked up with the cash market open, going through the high of the previous day and then just drifting. We had a sell here that was filled, and as soon as I saw the 50 EMA there support and the green bar, which means that there's volume inside of there's a buying action, then prices came back, stopped out the short, and then went up to the scalp and then reversed and then tried to move down again and then reversed and stuck in this horrible sideways move. The last three trades showing profits though, but awful. You can see how quiet it was during yesterday and how sideways it became as well. So I'm just going to fast forward through to the next trade, and again we just see the market trying to get back above that 50 EMA. It's compressed and trapped as prices move sideways. I've drawn the fibs in there just to see where the market would go to, and then you can see this one actually does go down towards the close. Got 3 levels of support. You've got the red line there for the big round number, the close, and the 200 MA, and then prices move back up. Then we go into the morning, and again you can see there sitting on the 200 MA, but eventually breaking, then coming back, and prices just sideways till we had the economic news out yesterday, which was a positive. Well, it wasn't really a positive for stocks, but it certainly sent the market up. And then we headed into the afternoon, which was just as quiet. We had a short that prices didn't want to move lower after, despite going below the 200 MA, the black line there just became a bit of a magnet and didn't know what to do. It was more of a mean, as it were, sort of the mean of and trading above it and trading below it, a bit like a standard deviation, I suppose. But then the first trade stopped out. The second one also it stopped out as the market then came back towards the high, and it was just a mess. And we could see more of that today as well. And this is the time when they released that news item about NATO. The warning from NATO saying that we need to have more of a war mindset. Well, I'd rather not. So yeah, you can see how the 200 MA acts as a type of a magnet there, and then into the evening market coming back through the 200 MA, but finding support, then going back through. Like I say, it is like a magnet. So have a quick look at the overnight prices, see what the market's doing before we conclude. And again, you can see very, very tiny bars at the moment, very, very quiet. So we need something to shake the market up, hopefully not war. Okay, on that cheery note, that's the end of today's alert, and also the last one for the week. So have a great weekend. And if you've watched this far, thanks for that. Your support is very much appreciated. And I will see you in the next one.